Hello traders everywhere, Adam Hewson here coming to you from the digital studios of Market Club, and it's the second trading week of August. Lots of optimism in the air today with a possible happening in Greece, which has been going on forever it seems, but optimism is in the air, and I have three stocks for you today that are really bucking the trend. These are all energy related stocks. And as you well know, energy has been under a lot of pressure here for the last year or so. These stocks look really, really good. And let me explain to you why I think they look so good. First stock is Xcel. XEL is the symbol. And what you can see quite clearly on this chart that we've made a very large base. And the base we're talking about is right here. You can see from March, huge base. There's the monthly trade triangle that kicked in. It's the first signal we've had since way back here in March. So it's a long time coming. And also you've got like a little mini head and shoulders going on here. So again, if you just draw a simple trend line across here, get the breakout, and I would say we're going to see this market moving higher, probably up to the $38 to $40 range in the not too distant future. All of our trade triangles are positive. You can see, I say we had a monthly signal on last Friday, very good one, and you can see that came in at 35.15, 35.24, so it's not too late to get in. As I say, we're looking for this market to go to $38 to $40. Next stock we're looking at is Southern. Very similar pattern. You can see this, you can recognize it. Again, a very large sort of base we've been building here for quite some time, since March. We've broken out. Again, the signal came on Friday. First signal we've seen since actually back in February, and it looks good to us. We're going to see this market climb. It's not going to be dramatic perhaps, but it's steady, and sometimes that's the best kind. So there's the trend line breakout, or the base breakout I should say, and I could say we're going to maybe the $48 to $50 range. I think that's the sort of target zone, at least in the short term. But again, all of our trade triangles, very positive. I like that. So again, this is something to look at. Our last stock is Dominion Resources, symbol D. These are all traded on the NYSE, by the way, and a very similar pattern there. Monthly kicked in at 72.57. It's 72.31 on the close on Friday. Not quite as strong as the other ones. The other patterns are actually a little bit better in my opinion. We really have to close over the 74 area to get this really into hyper gear. But right now, all of the signals are positive for this stock. So there's three stocks, energy-related stocks, that look good to us and look like they're moving higher. Speaking of energy, here's the crude oil. All systems are negative. Simple as that. We've been going down really since July, and you can see our weekly kicked in really early, which is the one we use, weekly and daily. Remember, weekly and daily for trading. And our last signal on the weekly was 58.69. Our last signal on the daily was 46.92. So we're doing very well. We had a very tough second quarter with crude oil, but we're making it all back and plus. Gold seems to have found some legs here. We've been moving up. We talked about this last week. We've sort of been moving up in the period here. You can see we've moved up just basically a little bit on both the momentum and the prices, but nothing to speak of. This is not necessarily a bullish signal. This is more of a bearish signal. Usually you have a move down and then you have a breakout on the downside. When that happens, you want to be short this market. Right now you should be on the sidelines based on our weekly and daily signals. Looking at the euro dollar, it's a minus 55, indicating a trading range. You can see the weekly is down and the daily is up. And the other thing that strikes me right here is the fact that we're right up against the 50 line on the RSI. You can see that right here. So that, again, that is a signal. It should be at resistance. The trend is clearly down, but you want to see the daily turn red, giving you the green light to go higher, go lower. You want to see the daily turn red, giving you the red light to go lower. So I think we're still seeing this market more of a trading range, and really not too exciting for the time being. Looking at the Dow is very oversold, as we talked about that last week. We sort of flattened out a little bit here, a little bit of a flattened divergence. Again, we talked about the death cross, got very close to that on Friday. Didn't happen. It's not going to happen today unless there's a big downturn. So again, this market looks as though it wants to make some sort of turn to the upside, but it's way too early. All the trend indicators are still negative. Nothing to get too excited about on the long side. S&P 500, here we are, 65. It's a trading range. You've got a mixed bag on the weekly and the monthly, indicating a trading range. You should be out of this market at the moment and just trading on a very short-term basis if you want to trade it. Again, we're below the 50 line, indicating further weakness. The NASDAQ is just a little bit different. We have the monthly is the only one where you have monthly trend is still positive, and you can see today's action, boom, we jumped sharply higher. If we close over the 50 line, that's going to be a good sign. But again, the weekly indicated a trading range, and it's a minus 60, so that's how you should be viewing these markets. But take a look at those three stocks we talked about, Xcel, Southern, and Dominion. They all look good to us, and I like the way they're coming from that big base. Hey, I'm Adam Hewison. Have a great trading day.